When you see a billionaire step onto a super yacht the size of a city block, here's what you're actually looking at. The billionaire doesn't own the yacht. A company in the Cayman Islands owns it. That company is owned by an anonymous holding corporation in Delaware. That Delaware corporation is managed by a private wealth firm in Zurich. And the real human being, the actual billionaire with the champagne glass, doesn't appear anywhere in that paper trail. On paper, they don't own the boat. They don't pay for the fuel. And technically, they aren't even there. This isn't illegal. This isn't a loophole someone stumbled onto. This is a system, architected over decades, that the ultra-wealthy use to make their money legally invisible. And it runs through 5 very specific countries. Today, we're going inside all of them. Before we get into the countries, you need to understand one thing. Hiding wealth and evading taxes are not the same thing. Tax avoidance, which is using legal structures to reduce what you owe, is something every corporation on Earth does. Tax evasion, actually lying to governments about what you have, is a federal crime. What we're covering today lies entirely in the first category. These are legal structures. Expensive, complicated, deliberately confusing legal structures, but legal ones, which honestly makes the whole thing more infuriating, not less. The average American pays an effective federal tax rate of around 13%. The average billionaire, around 8%. Sometimes lower, and a huge chunk of that gap runs directly through these 5 countries. The Cayman Islands has a population of roughly 70,000 people. It has no income tax, no capital gains tax, and no corporate tax. What it does have is more registered companies than it has residents. Let that number sink in for a second. In a country with 70,000 people, there are over 100,000 registered companies. So who's running all these businesses? Nobody. That's the point. Here's how the yacht structure works. A billionaire wants to own a $200 million boat without it showing up in a divorce settlement, a lawsuit, or an asset search. Simple solution. The yacht gets registered to a Cayman Islands LLC. The company owns the yacht. If the yacht crashes into a pier in Ibiza, the lawsuit goes against the company, not the billionaire's personal bank account. The billionaire is invisible to the whole legal process. Annual maintenance costs to keep this company alive? Between $3,500 and $5,000. For someone worth $2 billion, that's the cost of a dinner reservation. And zero capital gains tax means when the yacht sells for $250 million 10 years later, the Cayman LLC pays nothing on that $50 million profit. The Caymans aren't the whole system, though. They're the first wall. Because a smart tax attorney will tell you one offshore company isn't enough. You need layers. Wait, Delaware? That's not exotic. Delaware is a state, not a country. Which is exactly why it's so dangerous. This building at 1209 North Orange Street in Wilmington, Delaware, is the legal home address of over 300,000 companies, including Google, including Apple, including thousands of anonymous shell corporations you've never heard of and never will. Here's why Delaware is the holy grail of corporate secrecy inside the United States. In Delaware, when you form an LLC, you are not required to list the name of the actual human who owns it. Instead, you hire what's called a registered agent, a professional middleman whose job is to put their name on the public documents instead of yours. A tax investigator, a private attorney, a journalist, an angry ex-spouse, they look up your Delaware LLC, and all they find is a law firm in a suburban office park. You don't exist in the paperwork. Delaware also has something called the Court of Chancery. Unlike every other state in America, Delaware has a dedicated court system for business disputes with no juries. Just expert judges. For a billionaire, that's not a minor perk. That's the whole reason they're there. You'd rather have a judge who understands corporate law than 12 random people from the jury pool. Delaware setup cost breakdown. Incorporation fee, $90 to $200. Annual franchise tax, $300. Registered agent fee, $100 to $300. Entity privacy. Filing. $50. Total cost to legally erase your name from a $100 million asset? Under $1,000. It is literally easier to form an anonymous company in Delaware than it is to get a library card in most states. And for the people at the top, that $1,000 filing fee might be the best insurance policy money can buy. Switzerland has been protecting wealthy people's money for over 300 years. It's not a trend. It's a national industry. Swiss banking secrecy laws, formalized in 1934, made it a criminal offense for a Swiss banker to disclose client information to a foreign government. That law has been softened since then under international pressure, but what replaced it is arguably more effective. The family office. A family office isn't a bank. It's a private wealth management firm that works for one family only. They handle investments, tax strategy, legal protection, and the day-to-day management of every company in the chain. The Cayman Yacht Company, the Delaware Holding Corp., all of it flows through here. When an investigator reaches the Swiss layer, they hit 3 separate countries, 4 different legal systems, and mountains of paperwork so dense it can take a decade to untangle. Most give up. That's not an accident. Switzerland also levies something called a lump sum tax for foreign residents, where ultra-wealthy individuals pay a flat annual fee based on their cost of living in Switzerland, rather than their actual income or assets. For someone with $3 billion in holdings, the math is extremely favorable. Add a nominee director service, where a professional proxy signs all legal documents in your name. And now even the Swiss paper trail doesn't lead to your face. The British Virgin Islands has around 30,000 residents. It has over 400,000 registered companies. Do the math. The BVI is where shell companies go to live in complete anonymity. No minimum share capital requirements. No requirement to file financial statements. No public register of company owners. In the Panama Papers leak of 2016, over 200,000 offshore entities were exposed. The single largest jurisdiction in that database? The British Virgin Islands. And those were just the ones that got leaked. The structure billionaires use here is called an International Business Company, or IBC. Setup takes 24 hours. Cost is under $1,000. Bearer shares, which historically meant whoever physically held the stock certificate was legally the owner, have technically been phased out under international pressure, but the BVI's culture of discretion remains deeply embedded. The BVI sits inside the British Overseas Territories framework, meaning it has access to global financial systems while maintaining its own independent legal code. It's the best of both worlds if your goal is financial invisibility. Singapore is the newest entry on this list, and in some ways the most sophisticated. While the Caymans and BVI operate through deliberate obscurity, Singapore operates through deliberate legitimacy. It has a AAA credit rating, a stable government, one of the lowest corruption scores in the world, and a corporate tax rate of 17%, which sounds high until you realize most of the companies there pay far less through exemptions and incentives. What Singapore offers that nowhere else quite replicates is the variable capital company structure, launched in 2020. A VCC is a flexible investment fund framework designed specifically for family offices and asset managers who want to pool private wealth in a structure that's legally clean, internationally recognized, and tax efficient. Since 2020, the number of family offices in Singapore has exploded. In 2017, there were roughly 50 family offices registered. By 2023, there were over 1,400. The Singaporean government actively courts billionaires with an enhanced tier fund tax exemption scheme, which allows qualifying fund structures to be completely exempt from Singapore tax on specified income. Translation: park your money here, structure it properly, and the Singapore government waves you through. It's also geographically perfect. Singapore sits at the crossroads of Asian wealth, making it the natural home base for Chinese, Indonesian, Indian, and Middle Eastern family offices that want a stable, English-speaking jurisdiction with world-class banking infrastructure. So here's what a complete shield actually looks like in practice. The asset, let's say the yacht, sits inside a Cayman Islands LLC. Zero capital gains tax. Legal liability wall. The Cayman LLC is owned by an anonymous Delaware holding corporation. No public ownership records. Protected by the Court of Chancery. The Delaware Corp is managed by a Swiss family office in Zurich. 3 countries deep. Professional proxies on every signature. BVI entities may hold shares in the Delaware Corp. Additional layer of beneficial ownership protection. And Singapore hosts the fund structure that quietly collects and redeploys the returns. By the time anyone external tries to trace who actually owns anything, they're looking at a Russian nesting doll of corporate structures that spans 4 different legal systems, 4 different regulatory bodies, and potentially a decade of paperwork. The full shield. Annual maintenance costs. Offshore LLC registration, Cayman, $3,500 to $5,000. Anonymous registered agent, Delaware, $1,200. Nominee director service, Switzerland, $10,000 plus PORIS. Multi-jurisdiction compliance audit, $25,000 to $50,000. Total annual cost to hide $200 million, approximately $65,000. Cost as a percentage of the asset, 0.03%. That's not a tax bill, that's a rounding error. Here's the thing that makes all of this complicated to be angry about. None of this is secret. The Cayman Islands publishes its company law online. Delaware's incorporation process has a website. Singapore's VCC framework was announced in a government press release. All of it is findable, readable, and technically available to anyone. What's not available to most people is the team of attorneys, accountants, and wealth managers who know exactly how to chain these structures together legally, and the $65,000 a year it costs to maintain them. The 5 countries we covered today, the Caymans, Delaware, Switzerland, the BVI, and Singapore, didn't build these systems by accident. They built them intentionally, competitively, to attract money. Because money that lives inside your borders, even invisible money, still employs local lawyers, uses local banks, and pays local service providers. The wealth is hidden. The fees to keep it hidden? Those flow into the local economy just fine. So the next time you see someone stepping onto a yacht, remember what you're actually looking at. Not a person and their boat. A legal structure inside another legal structure, inside a family office, inside a compliance audit, inside a tax framework, inside a jurisdiction that competed to host all of it. The boat is almost incidental at that point. Subscribe if you're not already. I cover the mechanics of wealth that most people never see.